So today I'm going to be talking you through the first module in the Babypips course. I think it's really important to understand the real basics of Forex if you're looking to get into this for the first time ever. But I think some of the terminology and some of the wording that's used in these courses can still be quite confusing, even though they are aimed at beginners. So what I'm here to do today is to talk you through each module on the Babypips course. There's lots of information out there. The one that I learned a lot from in the early stages was the Babypips course. So hopefully I can talk you through this and teach you a little bit about Forex, talk you through the course and the modules and help you understand it in a little bit more detail. If you have any questions about this, you're welcome to reach out to me. If you're not doing so already, please make sure you subscribe to the channel and hopefully catch you in the next drop. Thank you. Page of babypips.com. You can navigate to babypips.com in the search, or you can search for it on Google. On the front page, you've got two modules that you can go through: new to crypto and new to Forex. If you are interested in crypto, I'd recommend going through that. But for today, we're going to be going through the new to Forex course, and you're going to click Start Learning. Now, I would highly recommend that you set up an account with them, because what it will do is it will remember your progress through the course, and it will also give you kind of as you can see here, a marker on how far you've come effectively. We're going to start with the preschool. This is for currency trading, Forex trading, and basically is the entry level to understanding Forex trading and how to take trades and that sort of thing. Okay. So what is Forex? Think the stock market is huge. Think again, learn about the largest financial market in the world and how to trade it. And what is Forex? This takes us through the basics of really understanding what's going on in the marketplace. So Forex is a global financial market that allows a person to trade currencies. If you think one currency will be stronger versus the other and you end up correct, then you can make a profit. So that's the same as any kind of trading. Ultimately, we are betting effectively. We are gambling on the fact that we expect price to move in one direction. If we're buying, we're expecting price to move up. If we're selling, we're expecting price to come down. And that's where we make our profits ultimately. Once upon a time, before a global pandemic happened, people could actually get on airplanes and travel internationally. If you've ever traveled to another country, you usually had to find a currency exchange booth at the airport and then exchange the money you have in your wallet into the currency of the country that you're visiting. Now that's something that I used to do. Ultimately, I would go to the travel exchange booth in Tesco's effectively, and you'd be giving them your British pounds or your dollars or whatever your currency is, and based upon that exchange rate, they would give you the equivalent money back. That's exactly what's happening effectively in the Forex marketplace. You are betting one currency against the other, and depending on the price of that, depends on the deal effectively you get on that exchange. Now you go up to the counter and notice a screen displaying different exchange rates for different currencies. An exchange rate is the relative price of two currencies from two different countries. So you may find Japanese yen and think to yourself, wow, my $1 is worth 100 yen and I have $10, I'm going to be rich. When you do this, you've essentially participated in the Forex market. You've exchanged one currency for another. And this is maybe slightly misleading, because if $1 is worth 100 yen, obviously it's worth the exact same amount of money. 100 yen is, numerically it's more. $1 is worth 100 yen, but financially it's worth the same amount of money. So in Forex trading terms, assuming you're an American visiting Japan, you've sold dollars and you've bought yen. Before you fly back home, you stop by the currency exchange booth to exchange the yen that you miraculously have remaining, as Tokyo is expensive, and notice the exchange rates have changed. It's these changes in the exchange rates that allow you to make money in the foreign exchange market. So in the same way that if you were to come home with money left over from your holiday, change it back at a lower exchange rate and lose money, that is ultimately what we are betting on is going to happen in the marketplace for us to make money. So if I think the price is high of something and I expect that price to come down, what I'm going to do is I'm going to place a bet effectively. I'm going to place a trade against that currency. And when the price comes down, I'm then going to take the opposite trade, and that will then make me profit effectively, and vice versa for a buy trade. Okay. Now, what is Forex? The foreign exchange market, which is usually known as Forex or FX, is the largest financial market in the world. The FX market is global, decentralized market where the world's currencies change hands. Exchange rates change by the second, so the market is constantly in flux. Only a tiny percentage of the currency transactions happen in the real economy, involving international trade and tourism, like the airport example above. Instead, most of the currency transactions that occur in the global foreign exchange market are bought and sold for speculative reasons. That's what we were talking about, you know. The exchanges that happen, people buying and selling the marketplaces, are traders, big, large and massive, who are expecting price to move in one direction or the other. And that's what they mean by speculative reasons. So currency traders, also known as currency speculators, buy currencies hoping they'll be able to sell them at a higher price in the future. Compared to the measly $200 billion per day volume of the New York Stock Exchange, NYSE, the foreign exchange market looks absolutely ginormous with its 6.6 trillion a day trade volume. And that's trillion with a T. So what's really interesting about Forex is the amount of transactions that are happening all the time, and this is why so many people flock to the Forex market. There is so much money, $6.6 trillion a day is trading back and forth over various different currencies. That means the opportunities are massive. There's a lot of liquidity in the marketplace, and we'll talk about this later, of course, but liquidity is what we use as traders effectively to take our trades and make our money. So let's take a moment to put this into perspective. The largest stock market in the world, the New York Stock Exchange, trades about $200 billion each day. If we use the monster to represent the NYSE, it would look like this. Looks intimidating, looks like it works out, some even find it sexy. You hear about the New York Stock Exchange in the news every day on CNBC, on Bloomberg, on BBC. You probably even hear about it at your local gym. When people talk about the market, they usually mean the stock market. So the New York Stock Exchange sounds big, it's loud and likes to make a lot of noise. But if you actually compare it to the Forex market, it would look like this. The New York Stock Exchange looks so puny compared to the Forex market, it doesn't stand a chance. And it makes you wonder if the S in NYSE stands for stock or scrawny. Now, I have to apologize for the cheesy jokes throughout this. I'm going to cut some of them out for you because we're here to learn a bit more about the understanding of the Forex marketplace. But look, they have a good effort here. Now, the cryptocurrency market is even punier. Check out the graph of the average daily trading volume for the Forex market, New York Stock Exchange, Tokyo Stock Exchange, and the London Stock Exchange. So as you can see, the differences are pretty phenomenal. So the currency market is over 200 times bigger, but there's a catch. That huge 6.6 trillion number covers the entire global foreign exchange market. But the spot market, which is the part of the currency that's relevant to most Forex traders, is smaller than 2 trillion per day. But when you think about it, 2 trillion is pretty phenomenal still. And again, that's why it's so popular to be traded. Then if you want to just count the daily trading volume from retail traders, which is us, so you and I, and people that aren't massive hedge funds and banks, etc., it's even smaller. It's very difficult to determine the exact size of the retail segment of the FX market, but it's estimated to be around 3.5% of overall daily Forex trading volumes, which is around $200 to $300 billion. So you see the Forex market is definitely huge, but not as huge as the others would like you to believe. Don't believe that Forex is a 6.6 trillion market hype. The number sounds huge and impressive, but is a bit misleading. We don't like to exaggerate, we're just keeping it real. Aside from its size, the market also rarely closes. It's open virtually around the clock. The Forex market is open 24 hours a day and 5 days a week, and only closes down during the weekend. So, unlike stock or bonds, the Forex market does not close at the end of each business day. And this, this gives us great opportunity. There are certain times in the day that are better for trading, and you can learn more about that through my YouTube or my Discord channel. But ultimately, you have the opportunity, no matter where you live, who you are, your schedule, what you work, whatever your diary is like, you have an opportunity between Sunday evening at about 10 p.m. UK time and Friday evening at 10 p.m. UK time. You have an opportunity to take trades and make money. And it's great as well because you can hold trades overnight as well. Instead of just trading trading just shifts to different financial centers around the world. So the day starts when traders wake up in Auckland, Wellington, so that's Australia, then moves to Sydney and Singapore, Hong Kong, Tokyo, Frankfurt, London, and finally New York before trading starts all over again in New Zealand. Now what's really interesting about that is that whilst there are all these different financial marketplaces that you can dip your toes into, there are two that I'd highly recommend that you research and you start trading from. We may be getting a little bit ahead of ourselves, but just so you know from the outset, the London session and the New York session are the two best and high volume sessions of the day. If you want to make money, you want to make money quicker than in other times of the day. I'm not saying this is a get rich quick scheme by any means, but if you want to make quicker money and quicker profits, London and New York is where you want, because that's where the most of the trading volume is, and that's where most traders on a day trade basis will take their positions. So in the next section, we'll reveal what exactly is traded in the Forex market. So this completes our first session for today. We'll mark that as tick. We'll come back to this from tomorrow. If you have any questions on what we've discussed today, please pop them down in the comments below. I also have a Discord channel, which you can find through my Instagram @StrongMoneyForex. So if you'd like to come over there and ask me any questions, I'll be more than happy to help. Hope you enjoyed this lesson today, and I'll catch you in the next one over the next couple of days. Thank you.